I almost forgot. Hold on, let me get back. But everyone is right. This area right here, and for those that were just catching up, that may be watching the video, we were talking about how, and let me zoom out, how we can go to a higher time frame, and let me go to the 4 hour, just to recap. So for people that missed it, we go to a higher time frame and we simply draw the trend line and we look at price action. If y'all notice, there are no indicators, there are no oscillators, there's nothing. There is just candles, and we drew a trend line based on what we saw. Okay. All right. And as we can see, it is respecting these, both the top and the bottom. So this is kind of a channel. And so the question was asked based upon what we see here, going down maybe to the 15-minute, zooming out. Excuse me, guys. Okay. Zooming out, this is also, and we already heard a person say it, this is an area of interest. Whenever price is engaging with a trend line, and we don't know whether it's going to break the trend line or if it's going to reject. Okay, just based off what we see. So this is an area of interest. This also is a continuation trade here based on the 15-minute, because it is a obvious downtrend, right? And so this will be a continuation of the trend. This is the reason we don't just haphazardly just get in here. Oh, it looks like it's going down here. Yeah, it went down a little bit, but look at the ride you had to take in order to take the real move down. Okay. So when you have trend lines, it gives you a pretty fair estimate of the overall trend and the areas of interest that you may be interested in getting an entry. Okay. Or an exit. So if you, let's say you got in right here, you know, you can actually stay in until you get here. Okay. So if it gets shaky right here, you can either take your money or you can let it ride up to, because it's only going to reverse usually when it hits an area of interest. Okay. And also, this is a 415. Okay. This is a 415. Why? Why is it a 415? Because we based our analysis on the 4 hour trend. We based it on the 4 hour trend. Okay. And then we went to a lower time frame, which is the 15-minute, for our entry. So without any arrows, right? Without any simplicity arrows, without any smiley face lines, without any, you know, whatever gizmo or gadget. Okay. You all are learning with your eyes to see 415s, guys. This is a 415. Okay. As we, you know, as we say it, you know, we don't see a buy zone. We don't see a sell zone all day. This is a potential area of interest where it's likely going to be a 415 that goes up. If that makes sense, y'all give me a 9 in the chat. Okay. What I'm trying to do is to get you all to see, to trust what your eyes see, guys. Sometimes we can have so many bells and whistles and so many indicators going that we get shaken in our analysis, when the fact of the matter is, trust what your eyes see. Okay. So based on this, guys, is this a good time to take a sale in GU? Somebody answer that for me. Is this a good time to take a sale? Now, it may be, we don't know yet, but we're in a place of indecision right now. We have to let price tell us what it wants to do. All right. Now, let me close this. And now let's take a look. Now let's take a look at our simplicity system. Okay. This is the same 15-minute on GBP USD. Okay. Now we got a little more context and knowing what has it done? It hit 4-hour structure. Well, we would have already known that based upon the based upon what we already did in TradingView. Okay, so it is engaging. So it is very likely that we're getting ready to have a reversal to where we're going to have a 415. I think the daily arrow is right on top of the 4-hour, which is really a strong indication. Okay, and so what we do, we just wait for the price action to tell us what it wants to do. Okay, so we can add in. Let's give me 1 second. Okay, let's get rid of my stuff. Let's just go straight. All right, so now we see the smiley face. I don't have the trend surfer on here, but y'all forgive me on that. And now we're just waiting until we see a proper reversal, and which usually is an indication of, y'all excuse me, my battery about to die. You know, we wait, going back to our old thing, we wait until this will be our place of entry right here, right? That was a place of entry right there. We could have put our stop above this level here that Simplicity gave, and we're good, guys. And look at what it did. It went right into profit. So we're waiting for the same thing to happen. But guess what? We let the indicators tell us what we already know and see with our eyes. And this is the same area that we're looking at on Simplicity. Okay, guys, give me 1 second. I got to plug up my computer or it's gonna die. Give me 1 second. Okay, we're back in business. I'm sorry about that, guys. But again, this is the exact same thing, guys. So you all do me a favor. Somebody give me any pair. Let's do some real analysis on it this way, because I want you all to get used to it. CAD JPY, it's the first one I saw. CAD JPY. Let's look at that. Okay, and again, guys, I know it may seem awkward to be in one system to do one thing and go to the other, but doing your analysis is so much easier on TradingView. I promise you, it is so much easier. Okay, let me get rid of all drawings. Let's go to the 4-hour. All right. Well, I'm on the 4-hour. This is where I mainly do mine. You can do daily as well. There's nothing wrong with that. All right. So let's not cheat and look on MT4. Let's do our analysis here. So somebody tell me what are we looking at? Okay. Are we in an uptrend or downtrend? Okay. Based upon that, we can look at this now. I would say we are in an initial downtrend, okay? But to be honest with you, it's kind of in no man's land right now. It's moving down right now. And I don't know why my mouse is doing this. Y'all please forgive me. Exactly. Exactly, Garrett. We don't know yet, okay? Because it could be in a phase where it is being a pullback and creating a, and I don't know why this thing is doing this. My goodness, hold on 1 second, guys. Let me get rid of it. Yeah, something is definitely going on, bro. All right. Anyway. Yeah, I'm using my mouse pad now and it's still doing it. But anyway, it's going down, but look at this as well. There's also a upward convergence going this way as well. Okay. So this is actually kind of and I have no idea why I was doing this, guys, and my apologies. This is kind of like a pattern that is being created, and we don't know yet. So to be honest with you, we really don't have enough information. It needs to do something at this convergence right here. Exactly. It is a harmonic. So it needs to do something. So I definitely would not trade now because it is in like an area of indecision right now. And so it could do one or two things. This could be a pullback for a continuation. This could be just another higher low right here. Okay. We don't know yet. All right. And what do we do? When in doubt, what do we do? We stay out. This could pop either way. All right. See how tight and indecisive this is? Unless you're scalping, this is no good. Okay. All right. And this it's creating some type of wedge or something. I'm not very well versed in the patterns, but it's creating some type of wedge where it's going to either break one way or the other. But right now, as you can see, it's getting constricted. The price action is getting more erratic, and eventually, it's going to pop one way or the other. Okay, but I would not touch this with a 10-foot pole. Okay. But there's little trends here, but it's nothing flowing that you could scalp off of this, no problem. Okay. Somebody had given another one because I want to give a AUDCHF. Let's look at that. Do y'all understand why we would not really want to touch this right now? AUDCHF. Get rid of all my drawings. All right. Let's go to the 4-hour. All right. Now, what do we see? All right. What do we see, y'all? Down or selling, right? Y'all get that? Or consolidate. It could be correct. Could be some consolidation like there. This is the area where it's kind of consolidated, move back and forth. We just looking straight across. We can see, you know, some area where some funny business has been going on right there, right? All right. So that's no problem here. So where would we see some previous areas of interest? Let's look back and see what it has done before. This be an area, that be an area. You know, this was like a little mini trend within a trend. That could have been an area of interest at a point in time, okay? All right, so now what we can do, we can go down to the 15-minute. And that would have been your 415 entry right there. Okay. Maybe that. One second. Yeah, my mouse or something must be dying, guys. My apologies. But even in this, we then can find there are trends within trends. Y'all see this? Okay. You can find trends within trends. Y'all see that? That you can find trend places of trend. So let's say you're not looking for 415. Let's say you're looking for a nice little day trade. Well, you can go to 15 or 30-minute. All right. Now this then becomes an area of interest based upon the higher time frame. Okay. So let's say we want to highlight, this area right here. Well, let's say you're a scalper. Well, based off the 15-minute, now all of a sudden this is an area of interest for your 5-minute entry. You can put it a 10 pip. You know, that was a 10 pip stop, 63 pip. That's a great little day trade right there. Okay, so there are trends within trends. Okay, and that had nothing to do with what's going on the 4-hour or anything. That was based on just a higher time frame. Look, okay. So we then can look and let's look and see if we can find the similar thing. Let's look at AUDCHF, right? So let's see if we can find that here. AUDCHF. All right, we're on the 15. Let me look to see when that was specifically. Look at a date and time. That was November the 9th. Okay, today being 11th, so that would have been Monday. to look at November the 9th. So this is about November. So this was that peak here. All right. This was that peak at November the 9th. All right. So let's go down to the 5-minute to see if we would have found something there. Look what we got, guys. Look at this. Y'all see that? I want to make sure, can y'all see my screen? I want to make sure y'all can see it. If you all can see my MT4, give me a 3. Okay, awesome. Thank you. Just wanted to make sure. So as you can see right here, guys, this is the same thing that would have given us confidence, because what did it do? It rejected the 15-minute trend. When it did, what do? We could have put our stop up here about 10 pips, like we said. What did it end up doing? It ended up running about 60 pips down. Okay, it's that simple, y'all. So what I want us to start doing is going into TradingView, right? Going into TradingView. We want to start going into TradingView. And doing our analysis here. Okay. Doing our analysis. Let's look at doing our analysis here. And then let the indicators just confirm or give us the greatest entry based on what we already know. Okay. Then you're becoming a dangerous trader. Okay, because you're not dependent on if the indicator's having a bad day or if it gets tricked out. Because you do know, like, these market makers, they throw stuff out in the market for the sole purpose of, because they know that most traders now are using sophisticated instruments. Okay, so what better way to get people suckered in than to make them think, than to trick their indicator to thinking that something is going to go on. If I have all my hope and reliance on this indicator, then people will, they'll fall for the okie doke. Okay, but your eyes don't lie, guys. This is unmistakably what, as you look at this is unmistakably an uptrend. Okay, this is unmistakably an uptrend. All right, so you can take, this is a little mini downtrend. I think it's just a pullback, but until it breaks this line, it's an uptrend. So I'm trading counter trend, and it's okay to trade counter trend just as long as you know that it can reverse at any moment. Your likelihood and your probability is going down. Okay. So does that make sense? Anybody have any questions on trend lines? And guys, it's really not that hard. And I apologize. What can happen will happen. I've never had these problems I'm having tonight. But what can happen will happen. It's something I have locked and I just don't know what it is. But anyway, you can find these areas of entry based on a higher time frame. And to be honest with you guys, that is all this is. When we're talking about looking at these buy and sell zones, that's all this is, guys. All it is just another form of showing you where the structure is, but you can draw trend lines and they line up exactly with. If I drew a trend line right here, from here, and this is one of the ray, the diagonal ray. So let me get rid of the ray and change this to yellow. Okay. Look at that. You see where this thing connects? It hit right at the top of this sell zone box. Okay. So the way these things are calculated in the background, these boxes are just showing you what's already going on from a trend or a Fibonacci perspective. Okay. Hit right on that trend line and it started going down. Okay. So I want you guys to start training your eyes to, well, you know what? I knew this was going to happen. Thank you, Simplicity. Thank you, Gazelle. Thank you, whoever. But I knew it was going to happen because I had already done my proper analysis. Okay. Any questions on the trend line? Because I want to quickly get into the Fibonacci, and we may finish it up on Monday because Fibonacci can get a little convoluted. Any questions on that before? Boom. Okay. So now let's look at the perspective of, let me close this window. See if I can. Okay. See if this is going to work. Okay, let's try it. Okay, guys, I'm coming. Just had to get something straight here. All right. So I want to show you guys the principle of Fibonacci, okay? And I talked about it a little bit in the lesson on Monday. Anybody that did not review that. So Fibonacci is just a measurement in percentages, okay? And I'm gonna throw one up, and people have put different percentages on fibs, and that's fine, okay? But what you basically do is go from one peak to a swing low to a swing high, okay? And basically, as we look over here to the left, this is the length of that move. These are the percentages of that move. So if a price came back, this is 38.2% of the move. This is 50% of the move. This is 61.8% of the move. This is 70%. This is 80%. This is 100%. That's all it is. People try to make it too complicated. And y'all have to understand, this is algorithm and math. That's all these markets are. They're algorithms and math, okay? And by doing that, by doing this, we can project whenever markets go up and down. We know because the uptrend is a higher high and a higher low, right? So it's going to pull back some. All right. So what people will do is, let's get on another pair. Let's get rid of this. That's something we've been watching. So let's look at this. All right. We can do large fibs, where we could just do, usually you go when you're doing a large fib, let's say you can go to a 4-hour time frame. And I can take it from the swing low and take it up to the swing high of here. And I can see areas where it's likely price is going to come, it will come back to. Okay. So what you do, you can do it on 4-hour, and then you go to the 15-minute, and now 15 or a lower time frame, and now I can see where price is likely going to go on the lower time frame. That's one way to do Fibonacci. Okay. But let's say it's a 415 like this. Let's say it's a 415. We can clearly see this was an area of interest and it started going down, right? And let's say, let's go back in time. Okay, and that's another feature on TradingView. It's a great feature, guys. All right, so let's say we know we're in a downtrend and we want to see a likely place of entry. We don't want to chase, okay? We don't want to chase price. So what we do, we're going to take it from the swing high and we're going to go to the previous swing low. Okay. I'm sorry, guys. I got a lot of alerts. I'm sorry. We're going to go here. Oh, no. Wrong way. I'm sorry. I did it right the first time. I'm getting confused. We're going to take this high and we're going to go to the previous swing low to swing high. Go to the previous area, pretty much of structure. That's basically what it's saying. Okay. So we don't want to jump in now, right? Because we don't know when this thing is going to reverse. It pretty much did it. Let me go back. This is, let's go back right here. I'm going to tell you guys this right here would be a miniature kind of fib situation. Let me enlarge this, okay? A big long move like this, let's measure this move. This thing has run 66 pips on a 15-minute. If it's run 66 pips on a 15-minute, I can pretty much guarantee you there is a pullback that's coming. You probably could use RSI, could tell you that it's oversold or whatever it is. But just history and knowing, it's about time for it to pull back, okay? The mistake that people make is they jump in right here thinking it's going to sell. And what does it start doing? We take, now it starts pulling back. Okay. Now, as you can see, this right here, this low that I drew to, this low that I drew it to, this was the pullback. If you all see this right here, this was the pullback. It went to the 38 point, between the 38.2 and a 50 Fibonacci line. A lot of times it will go to this golden zone. The golden zone is 50%, 61.8 or 70. Sometimes people add this to 38.2 in the golden zone as well. As we can see, it went to this golden zone, and what did it do? Boom, the bottom fell out. Okay. So that's how people, when you hear people talking about getting sniper entries, a lot of times people using Fibonacci. Okay. Let's look at something else. Let's look at gold. Okay. because everything respects these levels, okay? And all Fibonacci is looking to previous levels to see where price has been before, and it respects it, okay? Let me get rid of all of this prior stuff. I'm sorry. Okay, right here, we're in an obvious uptrend, right? You definitely don't want to trace gold, right? So what do? We take the field from the lowest and we take it to this peak right here. Okay, let's pretend we don't know this is coming around the corner, right? So and in doing that, we say, okay, anywhere in this zone right here, it's an area where price is going to pull back. I don't know to what extent, but it's either going to pull back 32% or 33%, 50%, or 61%. Okay. That's why I have these golden here, because this is the golden area where it normally pulls back. Okay. So as we can fast forward, see it teeters along, teeters along, teeters along, teeters along. Goes up a little bit. That was your touch right there. Y'all see that? That was your touch right there. That was your place of entry. You wouldn't have got in. Uh-oh.
I want the doubles. I want to pin up doubles.
Lay down while I get your pull up.
I want the double. I want my double.
Hush. Hush.
That's sweet. I'm trying to find somebody so I can shut up. Oh, that was cute. I missed them days. But get it back to here we go. So this right here, guys, was your place where it touched it. Okay. Now, I would not have gotten in until right here, until the price action engulfed this level here. All right. So don't worry about trying to get it right here. Let price action confirm that it's okay, because once this engulfed that and this engulfed that level, I would have felt comfortable enough to get in at this point. Hold on. I would have felt comfortable once it broke this level. When it broke that level, then I'm getting in here. Then I'm getting in here. I'm putting my stop probably below this level, maybe, or maybe this level here. And here's the great thing about Fibonacci, y'all. Price loves whenever you do Fibonacci right. I always go to the 61.8 fib line. Okay. I don't know why, but price always usually respects it. Okay. Watch it go up. You gonna hit it today? Boom. Price almost always respects that 61. You see how price is just hugging at 61.8? And so the great thing about Fibonacci, it is mathematics, y'all. It is algorithm. If you do it correctly, and so this is how, when people are setting, if you follow people in their signals and all those things, this is why people will say, okay, this is TP1, this is TP2. You was like, how did they know it was going to go there? A lot of times it's Fibonacci what people are using. Okay. And it works. You know, it works no matter, like this is an obvious, you know, downward trend right here. But you can find places where you can get in and you don't have to chase. Okay. So let's look how we can do this in conjunction with, oh my goodness, look at that beautiful drop. Let's look how we can do this in conjunction with trend lines. Okay. As we can see here, we can see a good healthy trend. Right? We're in an obvious what, guys? Talk to me. We get it. We get to bed. We're in an obvious what? Downtrend. Yep, exactly. Okay. So what we can do is, even though this is a beautiful drop, and this is the stuff that gets people drawn in right here, right? People get drawn in on this. I'm telling you, you get a beautiful drop like this, y'all, it is going to retrace. You just like, don't chase this because you're going to have to wait for it to breathe. Like, you know, all of us, we may be some very physically fit people here, right? But no one can run at full speed. You have to take a breather. All right. So this right here would have been a great opportunity, even with this trend line we know, to draw a fib. All right. We could draw it down right here. And here's the thing. That is more like it. All right. So what I did it too large. I forgot I'm on the 4 hour. So the higher the time frame, the shorter the distance it will appear. But as you can see, when I drew it from here to here, now I'll go to the 15-minute. My apologies on that. Now we're seeing great areas where we can enter in on here. 1 second. I personally like to draw my fibs on like the 15-minute or 30. Okay. So what I'm doing, I'm using the trend line from the higher time frame, and then I use my fib. I use my Fibonacci on the lower time frame so that I can craft and create an even more customized entry. Does that make sense? So like this may be my area of interest right here. Okay. This may be my area of interest. I missed it. All right. So what I would do, I would take it from this initial entry. And let's say it pulled back right here really good. All right. So I'm waiting, like, I'm not going to get in right here because I know it needs to breathe. So what I do, I wait for it to pull back, and this right here, let me get the highlighter. This becomes my area of entry right here. All right. So let me tell you how to take this trade. Excuse me, short. I can get in at this 50% fib. I normally put my stop about 2 fib lines back. Okay, so I will put it above the 61.8 and above the 70. And guess what's above the 70? It's above the trend line. Y'all see how they work together? You do the trend line on the higher time frame. You do the Fibonacci on the lower time frame so that you can pinpoint your entry. Okay. So now, so you see how that lined up with it? That lined up with it. The 70% retracement line lines right up with the trend line. So I can put it safely above that. Let's just round it up, make it a nice round number of 30 pips. And guess what? Remember I said, guys, I love to go down to the 61.8 because it's just like a magnet for price. And look at that. You would have a 30 pip stop loss, 150 pip. Let's just round that up. Take profit. And it went to that line. It took a while to get there. You may say, you know what? I'm just going to take my money here. And nobody's going to be mad with you. But look what it eventually got to. Eventually went to that 61.8 fib line. It played around for a while and then it broke. Okay. And that's all you can do. So if you're ever thinking, hey, I got to wait until I get another simplicity arrow or something like that, you don't have to. So that was one fib. Okay. That was one fib, but there are fibs within fibs. So let's say this was your peak entry. So let's say now this was your entry, and let's say you're waiting for another place to get in because you still see that this is a good downward trend. Okay. So now we take it down to maybe this one. All right. We wait until it gets near that zone again. And then we can find a place of entry. All right. So we can get in here again. This is your place of entry. You put it 2 fibs back. That's about 30 pips. I'm taking it down to the 61.8. That's a 30 pip stop, 132 pip take profit. We hit it with no problem. Okay. If you know it's a strong downward trend, that's fine. What we do, we find another swing high. And y'all, it's really this. And if y'all notice, I'm not using any indicators, no arrows. We find another swing high. We go to a swing low because we're not going to chase, right? And what do we find? You have to be patient. This is your entry. You put your stop about 2 fib lines back. It's 23 pips. We're going to take it down to the 61.8. And look, y'all, it went there like a laser. Look, it went right to that line. You had 23 pip stop, 109 pip take profit. It went right to that line. Y'all see I'm not making this up, right? Y'all see the same thing? And this happens until it looks like it might be, look, and then it reversed. Okay. Now we see a reversal in trend. Okay. We see a reversal in trend. All right. So now we're going up. So let's look to the left and we can see these peaks right here. Okay. So this time we're doing this swing high turning. Let's go to the previous peak and turn. Okay. If you wanted to, you could go there if you wanted to. Okay. I like to go to kind of a little extreme high. All right. Because guess what, y'all? You won't have this to the when you see this, let's say price is gone here. You won't be able to see what's going to happen next. So you have to look to the left. You have to look to the left to get a swing high for you to measure your fib off of. Maybe you want to do this one. Okay. I personally would do this one because this is a strong level because it's been rejected 3 times. Okay. So what you do is you do your fib. I mean, whoop, see that right there? It went a little past that golden zone, but we see strong rejection. Okay. So I wouldn't get in here. I'd get in on this engulfing right here. All right. Oh, that's too close. I would get in on this engulfing right here. So this would be my entry. I'm gonna take a long position, get in on that fib line. I'm going to take 2 fib lines back. Okay. 2 fib lines back. That's like, let's just round it up to 15 pips. Okay. 15 pips, stop. Where we're going to have our target to, guys? See if y'all been paying attention. Where we taking our target to? Talk to me. Talk to me. 61. That's it. 61. So we're taking our take profit up to 61. Now, this could be your hardcore take profit, but guess what, guys? This could be your. Let me write a little bit. This could be your TP1. This could be your TP2. This could be your TP3. So you're banking the whole time that's going up. Okay. Now I didn't see where this went. So let's see how it does. TP1 hit. Come on, quit playing. Get up there. TP2 hit. TP3. Boom. That's your trade. 64 pips off of 14 pip take profit. That's a 4-to-1 trade. See that? I'm telling you, it's mathematics, y'all. It is mathematics. All right. And like I said, if you know you're in a strong trend and you've already if you know you're in a strong trend, let me get rid of these drawings. That was just your first one. And let's say, hey, it looks like it might be getting ready to pull back some. Then you get rid of, you don't worry about that anymore because you've already made your money there. So you know what? It's geared to pull back some more. So what I do, I find another swing low. I go up to this swing high. It looks like where it pivoted. And we don't know yet. We can't make price do anything. Okay. All right. Now we see right here, we see some rejection. Y'all see that? Now we're doing this real time. You see that hard rejection? That's a hammer. Okay. I would keep my eye on this. I don't know if I'm jumping on this quite yet. Might need to see the next candle paint. Boom. I'm getting in now. This is my place of entry. Okay. I'm going to take my fib, take about 2 fibs back. Like this is really good. If you want to be extra conservative, take it 3 fibs back. Okay. 15 pip fib. What are we doing, y'all? Where are we taking it to? Taking up to 61.8. Okay. So we're looking at a little more than 2-to-1. This could be your TP1, 2, and 3. All right, let's see what we get. We might get stopped out. We got stopped out. It came back and retested. It stopped us out, and that's okay. That's trading. Okay. Evidently, it's probably going to come back and retest this level again. Yep. It came back and retested the same level. Y'all see it? Tested a third time. I bet you down is ready to take off. Watch this. You could have done a little small fib from here to here. Okay, that would have been your little fib area. At that engulfing here, I'll put it underneath there. I'll just put it down under here just for safekeeping. That's your 61.8. Or you can go to other evolutions of 61.8. Like I think it would have been right here in between that and that. This is just choppy area, but y'all see this is a level that is being respected. I mean, a major area. You see, it keeps coming back to the same area. Okay, so y'all know how the U.S. dollar has been, but that's it, y'all. And look, you simply, and this is operating within. It's still in a downtrend based on the 4 hour. Okay, so we can say, hey, we're only taking sales. And even though that, and I see why the buys are not working out as much. It's because technically we're in a downward trend. So the real things to take are really the sales. All right. So now we can look here to there. On 4 hour. Now it makes more sense if we would take like a sell here, put our fib up, maybe two lines here. Let's see what it does. I don't know. Yeah. It's in consolidation, guys. So it's not going to give you anything solid. But that's the reason we do things in conjunction with these trend lines, because it's probably going to be respecting that. So let me fast forward to see what it does. Okay, so this was probably the trend line touch here. That was a point of interest. All right. So you can do a fib here, down to there. That would have been your place of entry here. That would have been a place of entry. That would have been a place of entry. And as you can see, it's in that golden zone. Okay. So that's how we use both of them together. We use trend lines of higher time frame to go to lower time frame to do our fib so that we can pinpoint our entry. Okay. And our take profit. But when I tell you, when you do it right, it respects that 61.8. Okay. When I was losing those trades, the reason I was losing those trades because I was going against a downward trend on the 4 hour. The higher time frame saying we're going down. So it gave you some pips, but ultimately went down because the higher time frame, but the higher time frame was bearish. So y'all, that's it. Any questions? I know some people had to go, and that's not a problem. But any questions that anybody may have? And what I do, I will post people have different fib settings. I have some fib settings that I know that work for me on a consistent basis. Some people get into the the 23 point somethings and the 18 point somethings. To me, you can give yourself too much data and it can confuse you. I like to stick with the basics, the 61, the 50, the 70, the 32.8. Any questions?